Hi guys, I'm Rich. Let's go through my top 5 things to watch for the week ahead in markets. Number 1, the beginning of the third quarter of 2022. Looking at the performance of the major financial assets classes during the course of the second quarter, it's clear that risk-off sentiment was the primary motivator for market movements. Rapidly rising inflation fears, the resulting higher interest rates, as well as geopolitical instability are anticipated to be major market drivers throughout the third quarter, with stocks and bonds both affected, posing a problem for 60-40 portfolios. Number 2, the 30th OPEC and Non-OPEC Ministerial meeting. The meeting will be conducted via video conference on Thursday. After crude oil prices lost a lot of support over the course of the previous week, markets will be watching to see if producing nations will continue to adhere to their plan of gradual production increases of 432,000 barrels per day for the month of August, and if they, as indicated by Saudi Arabia, are willing to make up for the decline in Russian oil production. Number 3, US Q1 GDP release. The Federal Reserve's monetary policy and interest rate decisions will remain topics of discussion this week, with the focus on how those decisions will harm the US economy and how severely they will do so. The latest version of the US GDP for the first quarter of 2022 will be revealed on Wednesday. While the most recent report showed a 1.5% contraction in the US economy, any downward revisions could be negative for the US dollar. Number 4, the Eurozone inflation rate. Although the ECB stated in their most recent press release that they are inclined to increase interest rates by 25 basis points at their next meeting in July, they nevertheless decided to leave the rate hike amount in September to be decided based on inflation reports. Although markets continue to price in higher inflation forecasts, expectations for headline inflation in June are for it to decline from 8.1% to 7.8% on an annual basis. Were this slowdown to materialize, it could weigh on the euro. Number 5, Bank of Japan to own 50% of all Japanese government bonds. With US dollar Japanese yen at a 24-year high, the Bank of Japan has reportedly already purchased almost 25% more government bonds in June than any month prior, solely to defend its 25% yield cap on 10-year JGBs. According to economists, if the Bank of Japan keeps up its current pace of bond buying, it may surpass the 50% threshold this week, something that no other significant central bank has ever done. You can click on the link in the description below to see the full economic calendar with the previous month's data and the consensus expectation for this time. Thanks everyone, good luck trading this week, and remember to please smash that like button and hit subscribe so you don't miss more content like this when it's released.